Hi, I'm Scott Shellady here on the Seymour Group floors in Chicago for Traders Exclusive. It's the last day of the week and the first day of the month, March 1st. The first 2 months of the year have been good for the equity markets. We've kind of clawed back a lot of what we lost the last 6 weeks of 2018. And so here we sit looking at this new landscape going forward. We've got an easier Fed, a much more dovish Fed. They're much more data dependent. I think that's the right thing to do. I think the economy is going in the right direction, but what I'd say to everybody out there is this. I'm not quite sure how robust that is, and I don't know what I mean by robust. I mean, can we be knocked off course very easily? And I think the answer is yes. I think we kind of shook our boots a little bit on the last month or month and a half of 2018, and what I'd like to see is the economy more broad-based and a little bit more broad-shouldered, and where right now it feels more of like a juggernaut of a train, and I'm just worried that we could skip off that track. So keep an eye on that, because I've been saying it for a long time. We've had 0% interest rates for a long time. We've still got very, very low interest rates. So a 0% interest rate policy, now a very low interest rate policy, and we still can't buy ourselves any inflation, and that concerns me. Now, folks will say, oh, there's technology involved there, there's other issues, but at the end of the day, what we're putting into this engine and what we're getting out of the exhaust doesn't add up, right? There's a leak in our system, and we still haven't found it yet. And until I feel comfortable about what's been put into the system and what we're getting back out of the exhaust matches up, I can't really get behind this great economic comeback that everybody's talking about. Yes, we're going in the right direction. Yes, things are looking good. But how robust are we if we still don't have an engine that's giving us our bang for our buck? And I think that's the biggest problem right now. And I think that's ultimately what Powell's going to have to figure out. I don't think Yellen did, but maybe Jay Powell can. Other than that, yes, we had some hotter than expected GDP numbers yesterday. That's all good. We still have good earnings. However, they're not as good as they were. I'm not really that concerned about that. Yes, we're growing, but not as fast. But we're still growing, right? So you can look at that any way you'd like. A funny story was some folks would say, are you a glass half full or a glass half empty type of guy? Well, I'm a glasses twice too big type of guy, right? So we have to take things as they come and really read them and what we're going to look at going forward. And I still say this. Yes, we're growing. We're not growing as fast. That's not a bad thing. The recession talk, I'm still waiting for that, because we still haven't seen recessions ever with our earnings the way they are. That's a good thing. So I'm putting that off a little bit in the distance. But at some point in time, yes, we'll have one. At some point in time, everything's going to come back around again. But right now, I don't think we're so white hot that we're going to see us really start to slow down and hit the brakes. And I think the Fed's kind of said that with their new interest rate policy about being a little bit more data dependent. Other big stories, obviously, we've got China. We can't talk about anything in this industry without talking about China. It's a binary event. It's hard to trade those things. It's heads or tails. That's very difficult. I think that the only thing I would have to say is that a deal is going to be supportive to the market, right? It's just how supportive. I actually could see maybe the market even selling off a little bit once we finally do get the news, right? Buy the rumor, sell the fact. But that's not going to be the real story. The real story is going to be watching the rest of the world's economies trade freely with China, because that's what this is about, trading freely with China, and that's going to take a long time. So we're going to have to watch how that turns out or comes to play, because I'm excited about what we can really do when we're not spending $500 billion a year or losing $500 billion a year on intellectual property rights. All those types of things are going to take time to come through the system, but I think Donald Trump is really going to try to pin his legacy on the rest of the world finally trading freely with China, if we can trust them, right? We got to worry about Huawei and things like that. So yes, the economy's doing well. Yes, we're going in the right direction. It's not white hot, but we've got the Fed standing back a little bit here. The curve's been flattening. What are we going to look at going forward for the March? Are we going to continue these gains in the equity market? It'll probably be a little bit difficult. I wouldn't mind seeing some sort of stagnation, but all in all, the patient is pretty healthy. We just like the patient to get a little bit more muscles. That's all. I think that would probably be the best way to sum it up. So I'm Scott Shellady here, the last day of the week, the first day of the month, March 1st, 2019. We'll see what March brings us. Hopefully something similar to what January and February did. See you later. Have a good weekend. See you next week.